Welcome to Harmony in Trading. My name is Harmony, and this is my first video here. Well, if you're the type that trades GU, EU, this is just a in-depth analysis of what you probably missed and the incorporation of liquidity, ABC pattern, and broker block to give you the best sort of reward. All right, so first of all, on the GU, this is the GU 4-hour time frame. We need to realize that we are currently in an uptrend, and before we actually get this movement over here, we need to first know that price actually went on to, we get a liquidity grab over this level, right? So from this liquidity grab right here, we can see that the highs at this point was actually taken out, right? So from this point, we see series of bearish candles being formed, and then we get impulsive bullish candles formed also. Now that is before we see the impulsive move to the upside. It is expected that price will actually come to mitigate at least equilibrium of this level, which is denoted by this middle line right here. So but we didn't actually get there, and then we see market actually go on to create this highs now. Go on to create this high. So we actually see the demand zone over here being respected. All right, so we actually have this here being respected, and we have this here being respected, and ultimately we see that this is actually being broken down, and then we eventually get to this zone that was unmitigated earlier, and it is now mitigated. So from this we actually get why this is actually valid is the fact that it took the liquidity over at this point. You can see that it actually takes the liquidity over at this side, and then all the engineered liquidity over at this point was taken out following that also. This shows smart money concept footprints, expecting price to come down to where they have their positions in place. All right, so now from this we actually take out the highs over at this point, tapping into supply zones. If you look at the previous price actions, we actually tap into the supply zones over there, and from general knowledge, it's expected that once we actually get impulsive moves like this, this is actually from the Fed rate news earlier. So you can actually have your fib drone to tell you the equilibrium level, or you have your Gansu drone to tell you where price should actually reject to at least. So looking at this, we kind of have like the equilibrium point over at this point here. So we expect price to definitely fall to this region. Now, many would have actually been waiting for market to drop. Now, how do you actually get in this drop and not miss out on this entry? What is it that you actually missed? Friday being the close of the week. All right, let's get right into that. So let's head to the 1 hour time frame. Now, 1 hour time frame here is what we are having. Rather, let's look at the 15 minutes time frame. So from here we actually see that we have this set of range over at this point. We have this range over at this point here. So, and what do we say from range? We do know that liquidities are actually resting above these regions. All right, so and if you look at the H1 time frame, you do see that there is an order block that's actually formed right there. That's a bearish order block formed over there, and that's it from this point to this point here. So it's a supply order block formed over at this point. So from that, now we go back to the 15 minutes time frame, and from this we can actually see that they're doing the whole Asian session also. Market didn't actually trade into somewhere higher. It's just ranging within this range here. So it's expected that market will actually go into tap into deeper regions, and if we are being conservative, we will refine this region to the other block that we see on this 15 minutes time frame. So this right here will be our supply region, and from this zone here, you could actually take a form of risky entry to say, okay, you expect that market will actually trade lower, seeing that this is the last day of the week and it's expected that price should actually trade lower to kind of give a form of pullback or a form of correction pertaining to the impulsive move from this range to this from this swing low to this current swing high. All right, so from that you actually have this as your set entry. And another thing right there, this could actually be a risky entry for you, all right, and could potentially play out well. Using the benefit of hindsight now, you can see that. But yeah, another thing is, okay, we can also set a ABC pattern, so where we have this as our A. All right, so we do have this zone here as the A, and then we have this right here as B. I think I took the one for A. All right, no problem. Then we have this as C. Let me take this here back. So this is now going to use the concept of liquidity where A divorce B. But before I actually get to that, I have to put this here. Let me name this as 0. Yeah, so the movement of 0 to A actually gives us the movement of this point to this point actually gives us A, and then from this to this gives us B, and then from this to this actually gives us C. So this is all a battle of liquidity where A consumes 0 and then B consumes A, all right, takes out the liquidity or devours the liquidity at A, and then C will then proceed to devour the liquidity at B. All right, in many scenarios, many will actually be waiting for something like this. Let me drag this here. Something like this where we have 0 to A here, right, and then we then get A to take the to devour 0, which gives us B, and then this goes on to devour A, which gives us our C, and then our C will go on to devour B, which kind of gives us our which kind of gives us D. Let us use it that way. All right, so of course, at this point here, B, which goes on to take out the liquidity of A, our basic requirement for broker blocks is that the demand zone or the supply zone actually formed goes on to take out the high or the low respectively. So in this zone, we are actually having a order block, a bullish order block, which can serve as a demand zone, or which is a demand zone, going on to take out the liquidity over at this side to give us our C. All right, so which will make this a valid demand zone, which will potentially see price trade into that zone and probably go higher. But in the case where we actually see it broken, this order block, that this bullish order block that has been formed there will then serve as a bearish breakout, and what that means is price will actually go into that zone, all right, and then from that zone will potentially go downwards, and that will actually give us the clarification or the validation that, okay, yeah, the flip is complete, and it will continue to trend downwards. All right, so yeah, it's just the basic way we can have that. So we have the demand zone actually formed at this point, so that's the POI region, and then you see market actually trading to that region and then it falls. Most of the time also this price might not actually tend to come into that zone. You can just see market just falling. It will not give you that form of entry, except if you are fast on the lower time frame. Also, you want to catch the move and then you immediately just get into. So you could actually have something like this where price doesn't actually get here, and then you actually see price trading lower. Well, just what you need to know is that in the process of, let me take this, guys. In the process of C trying to take out B, we can actually have from this move right here, this is just a utopian view. This is not how it actually shows in the real forex market. The forex market is not as direct as this. It actually goes, it's not perfect, so it actually goes zigzag. So in the process of B trying to make C, there are going to be a series of lows and highs, moving. So that is demand to supply, and then when you are having this C, you definitely get a change of character or core for around this zone here, around the zone at this point, before you can actually see it potentially take out or ultimately take out the B region. All right, so you could actually have something like this formed over at this point, which will give us the coach, they call it change of character or market structure shift. All right, and then you potentially see it go downwards. All right, so that is that, by the way. And now let us just go back to the view chart right here. First of all, I could actually just throw this to one side. So yeah, we have this as a play of liquidity. So A goes to divorce 0, B goes to divorce A, then C kind of goes. Now it's actually going to target B. That is its own work. It's work right here. What we expect it to do, being of a conservative entry and not being of a risky entry, because you could actually enter from here looking at the fact that liquidity will be taken out from this side and stops will be taken out, all right? And so once price actually enters this region, you expect it to go downwards, all right? So but we want more of a conservative entry, and for that we actually wait. So we wait for the ABC pattern itself. So we get A actually from right here, and then what we actually see is takes out this 0, then B takes out this is confirmed, we get our C. Now what do we need next? Let's see the 5 minutes time frame. Now from the 5 minutes time frame, you can actually see this much more clearly, right? And then from the 5 minutes time frame, you can see that while B was forming itself, it actually created this demand zone, all right? And then over here we do get this also a demand zone. Now this region here should actually see price. What is expected of this region here is to see price tap into it, all right, and then goes on to take out this high. That is its sole purpose. It should go here, tap into it, and then we have a continuation to take out this high. All right, but that isn't what we see happening. So what we actually get right here is we get a change of character to the downside. So you could actually just edit this to touch, right? So let's put this bottom. Yeah, probably make the volume small. Sign up. So what did I tell you? All right, so we do get a coach over here to the downside, and then how do we use the breakout block right here? A breakout block is actually a failed order block. So this is an order block. We should have seen price to go upwards, but what happened? It actually failed, seeing that we get a change of market character or a market structure shift, and now that order block will now serve as a breakout block. So it is the same thing as supply or support being turned into resistance, or resistance turning to support. So in this case, we have a demand zone turning into a supply zone. So it then turns into a supply zone, all right, which actually see price tap into this breakout block. Now the horizontal line that you see in between right there is the midpoint. I love using the mid threshold. So it's called the MT also. That is the mid threshold. Let me delete this. So we could actually have our entry over here. Your market structure is over at this point. So you can actually have your short position from this region. That is after you've noticed it on the lower time frame. They have actually jumped in on here, and then you probably have a stop loss of 11 pips. Yeah, 11 pips at most. So let's go with that. And then where do you think your next run liquidity will be? We actually expect that it will go to the equilibrium level at least, which is over at this point. But being of a more realistic side too, we could actually use this point right here as our next draw on liquidity. Alright guys, thank you for watching. To see the concluding part, do check the description link below. Thank you.